Hey there, I'm Spencer Ford, a certified financial planner professional and CEO of Conservative Financial Solutions. We created the Money Minute to help give you insights on how you can better your financial life in 5 minutes or less. Because oftentimes, a better financial life means a better, freer, happier life overall. And that is what we want for you and your family. So let's get into it. Many people don't lose money in the market because of bad investment selection. They actually lose money because of bad behavior. The study of investor behavior and the psychological influences and biases that affect that behavior is the topic of behavioral finance. The thought is that by studying and having a better understanding of why investors choose to behave the way they do will help increase the likelihood of a better investor behavior and therefore increase the probability of success when it comes to investing. And since the Money Minute is all about helping you live a better, freer, and happier life by helping you make better financial decisions, we need to actually take some time talking about what can help you create that behavior that makes you a great investor. So we're going to cover a lot of topics that relate to the entire topic of behavioral finance. And we're going to start this journey today. And we're going to talk about several one of these, but we're going to start with an easy one first. And that is what's called familiarity bias. And familiarity bias is the tendency for investors to invest in what they know. As a result, investors are at an increased risk of not being properly diversified across multiple companies, sectors, and types of investments, which can increase overall risk and increase the likelihood of negative outcomes. So I'm from the Cincinnati area, and one of the major local companies in the area is Procter & Gamble, also known as P&G. P&G has been a bedrock in Cincinnati since 1837. Some locals jokingly call it Procter & God instead of Procter & Gamble. And P&G employs more than 10,000 people in the Cincinnati area alone. And a lot of employees and local families invest in P&G. I've met families with over 90% of their net worth in P&G stock. Now, P&G historically has proven itself to be a strong company. It has paid shareholder dividends for 51 years, and it's helped turn a lot of people into millionaires. But that's putting a lot of faith in one company, and longevity doesn't always guarantee success. Lehman Brothers was founded in 1847 and was in business for over 160 years before going bankrupt in 2008. Now, over the past decade, P&G, that stock price is up over 192%. It's actually outpaced the S&P 500 over that same time period, but P&G is in the consumer staples sector. So what about the technology sector? As an example, the NASDAQ index, which is heavily weighted towards technology, is up 233% over the last decade, 41% higher than P&G. Now, I'm not saying that you shouldn't own P&G, but succumbing to familiarity bias can have you leaving returns on the table that come from other sectors and other companies. There's over 58,200 listed companies on stock exchanges around the world. There are some great companies with some great opportunities that you've never heard of. So don't let familiarity bias hold you back from making great decisions as an investor. Thank you for listening to this episode of the Money Minute. If you enjoyed it, please subscribe to be notified when more podcasts are released.
Securities offered only by duly registered individuals through Madison Avenue Securities, LLC, MAS, member FINRA, SIPC. Investment advisory products and services made available through AE Wealth Management, LLC, AEWM, a registered investment advisor. MAS and Conservative Financial Solutions are not affiliated companies. Insurance products are offered through the insurance business Conservative Financial Solutions. AEWM does not offer insurance products. The insurance products offered by Conservative Financial Solutions are not subject to investment advisory requirements. Investing involves risk, including the potential loss of principal. Any references to protection, safety, type income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are by the financial strength and claims paying abilities of the issuing carrier. This podcast is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual situation. Conservative Financial Solutions is not permitted to offer, and no statement made during the show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from some sources believed to be reliable, but accuracy and completeness cannot be guaranteed by Conservative Financial Solutions. Please note, it is not possible to invest directly in the S&P 500 index. This measure is provided solely as a gauge of overall market performance. Standard & Poor's, S&P, and S&P 500 are registered trademarks of Standard & Poor's Financial Services, LLC, S&P. The historical performance of the S&P 500 is not intended as an indication of its future performance and it is not guaranteed.